So I'm going to read through. You're all going to get this book. This is all going to be done in a booklet, okay? Strat 1, Strat 2 together, and then polished up by Sharif and sent out. So don't worry, this is all going to be sent to you, or it's going to be through the Discord, okay? So anyway, Strat 1 is our trend strategy. This is when there's separation fundamentally. We'll get to that, okay? Strat 1 is a powerful strategy which capitalizes on strong technical and fundamental trends, okay? So we're looking for fundamental separation and technical entries in the direction of that separation. In this strategy, we look to swim downstream, not upstream. If you've ever tried to swim upstream, you will notice this is extremely difficult and eventually will result in physical failure, while swimming downstream requires almost no physical exertion as you are being swept along. Okay, try to swim upstream. Eventually, you're going to quit. Eventually, you're going to get swept back. Go downstream, even if you're not moving, you're moving along in the right direction. Okay, this is what we're looking for in terms of a trend. Okay, so the same concept goes for trading against a trend. Unless you have a robust back-tested counter-trend strategy, like a mean reversion, for example, you will almost always fail to find success trading against a trend. Our mission with strategy 1 is to find high probability entries at completion of exhaustion in the direction of technical and fundamentals. Okay, so how will we identify a trend? We identify the trend by using technical analysis, which we'll go through obviously, okay? And then along with fundamental separation by using the fundamental directions channel. So majority of you already know this, but for those of you that are new, okay, in the Discord, you take it to the fundamental directions channel. And within that channel, okay, you will have the currency strength. And we'll go through the conditions of that, okay? But that's the way we find fundamental separation. And then obviously we take it to the charts for technical separation. Now, there's variations of strategy, which we're going to be calling Strat 1A, 1B, Strat 1C, Strat 1D. Okay, and as you can see, this is associated to the types of entries which we will now go through. Okay, so let's do that right now. Zoom it in a bit. Okay, so as you all can see, this strategy is, again, a trending strategy when price is moving in a certain direction. Now, it's important to note that what is true to the upside is also true to the downside, meaning that everything that we're learning right now could also be studied or could also be implemented, in a downwards market as long as the trend is moving to the downside, okay? So everything that I'm saying to the upside, okay, is also true to the downside. Okay, so we have Strat 1A, we have Strat 1B, Strat 1C, Strat 1D, which we'll go through in depth, okay? Now, Strat 1A, all right, is going to be, in summary, it is the lower lows, okay? Strat 1B is consolidation. Strat 1C is when we see push, exhaustion, also fueled by Fibonacci. And then Strat 1D is when we have an impulse move, and then we look for a retest to previous high. This is not considered Strat 2 for those of you that are thinking consolidation, because it's still involved in a trending market. Okay, so let's start with Strat 1A, all right? And then we'll review again.